let's get to Jonathan Barrett, who's Managing Director at Commodity Broking Services in Sydney. Jono, we saw the oil price retreat overnight. We've been talking about some of the reaction from our viewers out there about the oil price. Talk us through how you're feeling about it, because it has been a very rocky week. The latest we're talking about is some sort of a peace deal being brokered, cut by Venezuela potentially.
Yeah, Karen, that's going to be, I think, very important. In fact, when you look at and you analyse where Gaddafi is in the scale of things, I think any result for him would be actually the right result for him, is actually going to the table and trying to get some result out of it. Because if he gets some result, he could retain some power, or he can opt to move out in a relatively peaceful way. So if anything, I think if we can develop what's happening in Libya with Gaddafi and Venezuela, then I think that's a solid outcome. As a result of that, perhaps oil in itself can have a pretty quick correction. Remember, we've got record open interest in the oil contract, so markets have a tendency to move where they'll do the most damage, and if that's the case, we could see a bit of a correction.
John, the preoccupation is squarely with Libya at the moment, but there are elections happening in April in Nigeria, Africa's top oil producer, so arguably the market needs to budget for even more risk.
Look, you're right, Sheree. This is what we're going to see. We're going to take each region as it comes. I think the market has factored in fear, given that the fundamental picture still remains relatively positive. So we don't have that issue about supply. The market has this issue about what potentially could occur, and that's what they're feeding into the price of crude at the moment. So with each region coming under control, then you'll probably see the risk premium erode. But if we do have concerns in Nigeria, also in Algeria, then that we'll have to treat that as it comes. That unrest, if it does create a bit of an issue in those countries, people will then factor in that premium. But at the moment, I feel that that risk premium has that potential to erode, and as a result of that, oil prices, I feel, could become quite stable, if not retreat back to 100 and maybe even below it.
Okay, Jono, the fear factor abating, seemingly pushing gold a little bit lower, but also these comments by Jean-Claude Trichet about interest rates in the Eurozone, rather, and whether we could see a rate hike next month. It seems to be reducing some of the appeal for gold.
Yeah, Karen, now this is interesting. From a fundamental side and also from a technical side, we all focus, the market actually focuses too on that 14.25. The fact that we traded up to 14.40 yesterday, and we're now back at 14.40, technically you could say you're now on a sell rally approach. We're advising our clients who have been long gold, right, to look at granting the 14.50 call on half their position and or taking profit, because technically it suggests that the market is running into resistance, and that resistance is probably around about that 14.40 level. So perhaps we're going to have a breather on gold on a technical side, but as you correctly pointed out, looking at the fundamentals now, that actually might provide support if, in fact, we see those inflation numbers starting to pick up.
John, oil and gold, of course, grabbing the headlines, but cocoa is at a 32-year high. Top producer, Ivory Coast, teeters towards the edge of a civil war. You must continue to remain long in this kind of environment.
Look, you have to. Sheree, you have to remain long when you have this type of environment, because it's really the only way you can actually trade it, because there are unknown factors out there which will affect supply. Once again, it's fear driving this market, and I think with the moves we're seeing in cocoa, that fear, the fear of the unknown, will keep prices better bid.
All right, John, good to talk to you as always. John Barrett, Commodity Broking Services, live down in Sydney. You too, sir.